Hello, folks. Welcome to our next tuitions. So today we are going to talk about some efficiencies which really changes the algorithm of our prices in most cases when we trade. So I know that we've been speaking about some liquidities and some fair value gaps, but there are some of the things that you need to understand that these are internal efficiencies that the market will always want to look at each time when you buy or you sell. You have to understand that each time when the market pulls up to make a buy side delivery, there should be a buy side liquidity. When the market moves down to give us a sell side delivery, there should be a sell side liquidity. So we spoke about our higher heights, our higher lows. So these are the things that we spoke about when we started our tuitions or our classes. We said each high and each low, there should be a liquidity resting below there. So each time the price creates a higher high and a higher low, a higher high, a higher low, a higher high, a higher low, and a higher high, a higher low, there should be liquidity resting on each low that drives this movement. So I want to talk about all this so that you can understand what we are talking about. So when you look at these candles here, there are a lot of efficiencies that the market had to go to or deliver, right? In most cases, people, they look at the efficiencies as a disadvantage to their trading strategy. But hence I'm saying that I've never seen myself trading support and resistance, but I use support and resistance to be able to attack. Okay, I use the support and resistance to attack in the market. Each time when I see a support and resistance, I use it, I trade it against it. All right. So I know that in most cases I've been trading, I've been showing you areas of support and resistance, but those are the areas that I use when I want to attack each time on the market. I take them as an advantage. So I just want us to look at this price here so that we can discuss what we see. All right. See, on this price here, we can see a lot of deliveries on this price. So we've been seeing our price delivering here, right? So I just want us to look at this price and we discuss more about it. We've seen our price giving us our lower lows, our higher lows, our lower highs, and so forth. So we are going to discuss about the efficiencies that I am talking about in the market. Okay, so these are the things that you need to understand so that you we move on to what we are talking about now. Because if we don't move on to what we are talking about now, we won't finish this class. So in most cases, when you see the market moving the way it does, is because there is liquidity on that low. So we are going to look at our internal structures and see what is happening on our internal structure so that you can understand why we have those inefficiencies on the market and the kind of efficiencies that might return the market. Remember when we talked about our prices, we said the fair value gap always brings the reverse of the market. Each time when you see the fair value gap, you should be ready to reverse. But there are some of the efficiencies in the market that might want to move the market as well, even if you have seen the fair value gap. So, for example, when you look at this price, on our previous price, you can see that there was an efficiency of a fair value gap on this area right here. All right. So this was an efficiency of our price right here. So we expected the market, since the market was bearish, okay, we expected the market now to come and fill up this efficiency and move back there. So if you can identify this, you see that the market the market broke this efficiency to look for another efficiency. So what do I mean? When you look at this candle right here, you'll identify some sort of an imbalance. All right, it's an imbalance on that candlestick, which makes another efficiency down here. So the market had to come back to this efficiency to fill this imbalance here to be able to move back up. You can see that on this area here, there's this efficiency, okay, that gives us an imbalance on that fair value here, on that candle there. So this candle here, we call it an imbalance, so more like a fair value gap. But this fair value gap, when you look at it, it is the one that has moved the market back up there. All right. So these are the things that you need to understand. Some efficiencies, they have to be felt before the market could go up. So most people, they will just identify the fair value gap and then forget about some of the efficiencies that might want to trigger the market up there. So when you look at this price here, we will be identifying our next high. That is, when we have filled the efficiency, our next target now will be this high here. Okay. When we have identified this high here, we will know that our market will have to come, okay, take out that high there, and we will expect some kind of retracement on this area. All right, and retest there, okay, and then the market will retrace from this zone before we can continue with our price to buy. Okay, so our main target in this price is to make sure that we deliver the price on our buy side liquidity. So when the market moves up, like we see this movement right here, all right, like we see this movement right here of the bullish trend right here, all right, this is the movement that gave us a buy side delivery. So what do I mean? I mean that above here there was a buy side liquidity, So the buy side liquidity was the one that we were delivering to. That's why hence I'm saying when you see the movement like this, just know that the price was giving us a buy side delivery. Okay, when you look at this zone here, when you look at this area here, all right, it is similar to this area here that you see, but this is something that we have to look at. This area here, okay, it is similar to this part here. So which means that what we did on this area is exactly what we are going to do in this area right here. All right, so this is something that you need to observe. So right now, since we have delivered on this buy side liquidity, our price now will want to deliver on this buy side liquidity as well. All right, and then we can come back again and retest on that zone. All right, so you have to understand that when you look at this price, when I say the price always delivers, I'm talking about situations like this. Okay, so I want to explain what was happening on this area. On this area here, we had a sell side delivery, which was happening around here. All right, so the reason why I'm saying we had a sell side delivery happening around here is because the market had to come to this sell side liquidity that you see below here. All right, but then since the market came to this liquidity, there was some sort of efficiency down there. That is the one that we are talking about now. All right, there was some sort of an efficiency down there. So efficiency that we are talking about is this candlestick that acted as an imbalance. All right, so we knew that the price, even if it can sweep this liquidity, there was some efficiency that is going to drive this market back up there. Okay, so the efficiency of the balance started from this zone. All right, this is our efficiency of the market. So you can see that the market had to respond from that area. Okay, the market had to respond to that area to give us that pullback. You understand? So you can see a little bit of wick there. Okay, that's how the algorithm always does. So that's the more you understand how the algorithm of the market operates, you will see that the market always have a way of trying to manipulate you. So you can see that even the opening, what our focusing is the opening and the closing of the candle. You can see that we opened just within the efficiency, that efficiency over there. So these are the things that you need to observe each time when you analyze the market. So each time when the market comes against the liquidity, you can find this is an efficiency going down there. So the market always makes sure that when it pulls back up, it has to feel an efficiency that is below the liquidity. You understand? So most of the time when the market comes for the liquidity, it has to feel the efficiency. So this is what is happening. You can see that we came to for this fair value gap right here, but still there was an inefficiency down there. So these are the things that you need to understand, that whenever you see a zone or an entry, you should look at some efficiencies that the market will want to fill. So some efficiencies, those are gaps. All right, those are gaps of orders. So the market has to come fill up those gaps and continue giving a delivery to whatever that we see in the market. So this is what you have to understand. So this is an efficiency. That is an efficiency. This is an efficiency. And we also had a little bit of inefficiency on this zone. So that's why you saw the market returning this from this zone here to the closing. There was an efficiency. That's why you can see the market had to take a buy to the zone and come back to the efficiency to retest and went up there and look for this efficiency to be able to move up there. So you can see the liquidity. So whatever that is moving this market on the current situation right now is this zone that here that we see. So an efficiency that we see right now, we can see some sort of that high there. Okay, that's high there. It is the one that it carries liquidity. So that higher height there is the one that carries liquidity as well. So we have to look at those zones as our point of interest. So these are the things that you need to understand that is happening into the market. So there are things that each time when people see, okay, fine, the market have filled the fair value gap. So what is it that I have to do next? You have to look for your efficiency that might want to trigger the market up there, okay, or down here. So there is always the buy side delivery or the sell side delivery. So this is what you have to understand. So I hope you enjoyed this live, and soon just keep on watching and giving me a subscription there for the next video. Thank you so much.